Hello. Hello. Hi, ma'am. Hello.
Hello.
Hello. Good afternoon, everyone. Trust you all are doing great. I thank you all for enrolling yourself to this event. We should start the session with a silent prayer for humanity as a whole for a minute. Thank you, everyone. Excellent Excel welcomes you all. Let me give you a gist of what Excellent Excel is all about. We are into data analytics, and our solutions are built with scalability, security, and performance in mind. It is managed by a team of experienced professionals from the fields of technology, finance, and operations. We have started a brand new talk show that is EIE Fresh Talk, which you all are a part of, where we are hosting great leaders and experts from various fields to speak regularly on a variety of topics. Our topic for this session is Best Practices in Financial Modeling by Danielle Stein Fairhurst. I request all the audience to let us know any of your questions, doubts, if any, by typing the same in the live chat box. The questions or doubts will be answered by the speaker at the end of the session. I'm glad to introduce our speaker of the session, Danielle Stein Fairhurst. She is the principal of Plum Solutions, a Sydney based consultancy specializing in financial modeling and analysis. She is the author of Using Excel for Business and Finance Modeling and Financial Modeling in Excel for Dummies. She founded the Financial Modelers Meetup groups and is on the judging panel for the 2019 Financial Modeling Innovation Awards and the Diversity Council for the Model of Financial Modeling World Championship. Thank you, ma'am. We welcome you. Over to you.
Thank you very much. Can you hear me okay?
Yes, Daniel, we can hear you.
Great. Well, thank you so much for having me and for organizing this. I'm very excited to be here. I'm a financial modeling specialist. So financial modeling is my world. It's what I do all the time. It's pretty much my whole career is been about financial modeling, and I love talking about financial modeling. So I'm very happy to be here with you today to be talking about financial modeling. So to start off, I'd like to just get I suppose, introduce you to a definition of financial modelling first of all, because I know that there's most people watching this, I imagine, are financial professionals. That you're working in business and you're probably already doing a lot of financial modelling already. And some would say that a financial model is really just a complex spreadsheet, which I guess is what it is. But to my mind, I think a more concise definition or precise definition is the idea that you have a problem with your business or a financial problem. Let's say, for example, you're launching a new product or you're trying to get some funding or something like that, and you need to create a model or a tool, usually built in Excel, that could display possible solutions to that real world financial model or problem that you have. And to me, that's the definition of financial modeling. So I love financial modeling so much. I've actually written 2 books about the subject, and they both cover financial modeling. So kind of similar types of topics are covered or in both books, but the financial modeling for dummies, actually I've got a copy of it right here. That one is written in a more dummy style and using Excel for business and financial modeling. That is actually the 3rd edition of that one, and that's probably a little more detailed, really. So I'm going to be drawing on some examples from both of those books because best practice in financial modeling is such an important topic that I've covered it in both books. So I'll be drawing on both of those books for some examples today. And what I really want to focus on is errors in financial modeling. And if you Google Excel horror stories, I'm sure you will have heard lots and lots of horrible examples of Excel gone wrong, or Excel horror stories where people have created Excel models and done all sorts of awful things with financial models. And we don't want our financial models to be a horror story. And so a lot of the financial modeling best practice that I'm going to talk about with you today is about errors and trying to reduce the possibility of being a star in your own Excel horror story. So we don't want that to happen to you. If you are if you're using Excel and using Excel for financial modeling, you should be terrified of having a mistake or a financial model error in your model. So if you are not terrified of having a mistake in your model, then you should be. So probably the number one thing that people worry about. And I think there's probably most errors in financial models could probably come down to 3 different types of errors. There's formula errors. So formula errors are pretty easy to make a mistake in Excel, where you just pick up the wrong cell or you put the $sign in the wrong place or something like that. But they're the most embarrassing when something like that happens. So you really don't want that to happen. So formula errors are probably the most career damaging. So we try to reduce that from happening. The second one is incorrect assumptions. So just putting in or making the wrong assumption or the wrong input. And as a financial modeler, you may or may not be responsible for the assumptions, but that's probably the easiest to fix, but also the easiest to check. And they can also make a huge difference to the output of the financial model. And lastly, the logic error. Errors are awful. So logic errors can be very difficult to identify. So it can be quite hard to pick up when there's a logic error in your model. So thinking about those different types of errors, these are the 4 different areas that I'd like to cover with you today. So most of the best practices that I'll be talking about are to reduce the possibility of having an error in your financial models. So let's jump into it. The first thing I'd like to talk about is assumptions documentation. So assumptions documentation is really important in modeling. I find it really terrifying when people say, hey, we're going to go ahead with this multi-million-dollar project because the financial model says we're going to make all this money. And unless you know what the assumptions are, it's quite difficult to take or to believe what the financial model tells you. So really the reason that we should document assumptions is because
Lost you,
any financial
Daniel?
model is garbage in and garbage out. Do you have a question, Deepak?
Daniel, we lost you. We can't hear you.
You can't hear me? Can you hear me now? Can you hear me?
Yeah. Yes.
Okay. I'm just going to try these. Is that better? You can hear me, right? How's that? So I'll continue to talk about the documentation of assumptions. So please feel free to jump in if my, I'm not sure what happened there, sorry about that, if my sound drops off again. So we were just talking about documenting assumptions. So any financial model should really be garbage in and garbage out. So having assumptions documentation will help with the validation, and it's a good idea to list all of the assumptions on a separate page, and the more detail you can put in there, the better. I'd like to talk now about some actual techniques of how to document assumptions in your financial model. So I'm going to take you over into Excel now, and we'll have a look at some of the different ways of actually documenting assumptions. So I'm just going to jump over to Excel. So you should be able to see my Excel now. Let me know if you can't. And I've got an overview of what might look like an assumptions page. And I'll just zoom in just a little bit. And what you can see here is I've actually created some comments, and these are quite new to Excel. They've only been out with the latest version. So if you right click, you can go in and reply, and you can create these kind of threads of comments. So that's not a bad way of documenting assumptions. The other thing you can do is put in a note. It's now called a note. That used to be called a comment. Comments are now the other thing. This is the note. So you can actually put in some kind of comment in here, and that will create the little red flag in there. I don't use those terribly much. I find them a little bit messy, and people don't really see them unless they hover over them. I would actually prefer to do a comment like this, where you click on the cell and then you see it pop up. So that's a data, that was done using a data validation. So if I go into data and then jump into data validation there, you can see that I've actually created an input message under data validation. And I quite like those because you click on it and it's like you are reminding somebody before they type into the cell. So that's a really good way, I think, of documenting assumptions. Another way is just simply to do some footnotes. I'll just zoom in just a little bit. And so that's just been using some formatting of superscript, and you just, it's just very, very simple solution. The way that you can actually do it here, if you go into print layout, you can actually go in and go into the footer and the header. I don't recommend doing that in financial models because nobody's going to see it unless you print it out. And most of the time you're actually looking on a soft copy of Excel. So yeah, probably I think footnoting is not a bad idea. The other one is hyperlinks. So you can, type out, ATO or something like that. You could actually just type out the link or just click in it there. The other thing you could do is go into insert and add in perhaps a link, and in this document, and you can jump to a particular name. If you want to link to borrowing, for example, you can click on that. That's going to jump back to where you were, and then you go back to where I was there. So that can help with navigation probably not so much with documentation, but when you're trying to help people to navigate throughout the model. Probably one of my favorite methods of documenting assumptions is just literally to type it out like that. It's just nothing fancy about that. If you do want to get a little bit fancier, you could do something like that. So you could have text with inverted commas around it. I will make this file available. So if anybody wants to, to get in there and see some of these examples, I'll make this available to be sent out. And so what we've done there is just use the text and use the text formula to format it. So for example, if this number were to change to something else, and you can see there that automatically changes. And of course, if the date were to change 2022, for example, that would automatically change also. So that's been done with the documentation of using the ampersand to string it together, more for commentary or for documentation. So if you're ever wanting to make comments about the model, like notes or something like that, I definitely would recommend using that technique as well. So just jumping back, so that is just a couple of techniques on how to document assumptions, because I think that's probably one of the fundamental points of financial modelling best practice, is to add documentation of assumptions, so we know why you should document assumptions, and that's how to document assumptions. So the next thing I'd like to talk about is some strategies for reducing error. So yeah, a lot of best practice is about reducing error. And in fact, there's actually a whole chapter in the Dummies book, which is all about, I think chapter 13 covers the 10 strategies for reducing errors in financial modelling in great detail. So I'm going to go through each of those different points now with you. The first one is to use the enter key. So I do find that, to my mind, I think that using the enter key is the first line of defense against errors in financial models. So let me show you what I mean. So if I go back to this example in Excel, what I find here is if I were to create a formula that looks like that, and then I hit the enter key and I look at it and I go, does that number look right? Because what I see a lot of people do is they edit the formula and then they click somewhere else, and they haven't actually looked at the result. So I know you can double click on a formula and click somewhere else, and yes, it will work, but do try to get into the habit of always hitting that enter key when you've finished it. So just click, just be really definitive about, okay, I'm finished editing the formula and now I'm going to hit the enter key, because if you were to click somewhere else, that can happen and it can cause problems. So try to get into the habit of always using the enter key rather than clicking somewhere else afterwards. And after you've hit the enter key, look at the formula. So does it look right? Does it look correct? And then after you check it, so check it yourself and check it again. And not a bad idea to use the F2. So F2 is your shortcut that's going to give you a view, so you can see if it's picking up the right cells. Even get out an offline calculator and make sure that the values are picking up correctly. And then after you've checked it 3 times, get someone else to check your work. So not a bad idea to have a colleague, have a deal. I used to have a deal going with one of my colleagues, and I would say, look, I'll check your models if you check my models, so that, because sometimes you really can't see the problems in a financial model because you're so close to it. You've been looking at these formulas for so long and you just simply can't see the problems that are there. And so sometimes when you show somebody else, or somebody else takes a look at it and runs a few checks, they can see things that you can't see. So get someone else to check your work. And of course, documentation and validating your assumptions is definitely a strategy for reducing error. And document your methodology as well. Sometimes it's quite a good idea to have a flow chart where you're sort of, this can actually reduce logic errors. So if you can actually show exactly the flow of the data or the flow of the calculation throughout the model, then that can really help to visualize the problem or the flow of information throughout the model, or the way that the calculations work. Excel does not do that very well. Power BI is great, or Access, where you can actually look at the relationships between the data, but Excel doesn't do that very well. So try to even create some kind of a visual documentation of how the calculations actually work. The next one is stress testing. So stress testing would be if you put some nonsensical inputs. So for example, if you were to put your price to 0, then you would expect that your revenue would be 0 as well. So yeah, just obviously you're never going to charge 0 for your price, for your items, but you want to test that, and just to make sure that the mechanics of the model are working correctly. So for example, you might say you could double your head count, and you would expect that your staff costs would double as well. If you were to change your growth rate to 0, you would expect the forecasts not to increase. Also, visualization can help. So charting metrics over time. Yeah, so that can certainly help. The next one is running some scenarios. So showing, if we show a worst case scenario, you would expect all of the outputs to go down, and if you run a best case scenario, you would expect them to go up. So I'm going to just show you an example, perhaps of what a scenario in a financial model might look like. I'm just going to jump over to the next page here. And this example here, we have a very simple property development example. And you can see our profit margin here is 14%. And that's on our base case, but if I change the drop down to best case, you can see there that the profit has increased. And then if I were to change that to worst case, and we end up making a loss. So those sorts of things by toggling between different scenarios, so that can really help to just really sense check your model and try to make sure that there are no calculation errors or input errors in your model. The next thing is some Excel errors. Now, I know some people hate seeing Excel errors. I don't mind seeing an Excel error. It means that there's a problem and I can fix it. I'd rather see an error like this. What I don't want to see is a number that looks like it's right when in fact it's completely wrong. That is much, much worse than having an Excel error like this. I know that you can suppress errors, but sometimes I do it, but quite often I'll just leave errors so that I can actually see them, and then I can fix them before I complete the model. So this one's not really an error. The div 0 just means you're trying to divide by 0. NA is usually with a lookup of some sort. A name is a named range. Refs are pretty horrible. Ref means that you are referencing off the page or you've deleted it, so they're quite hard. Value is not really a big deal. I really wanted to talk to you actually about a spill error. So a spill error is a new type of error because it's part of the new dynamic arrays that have come out with Excel 365. So I just thought I'd demonstrate what a spill error might look like, just in case you ever come across one. So you'll know what it is because it's fairly new. And if you haven't been using dynamic arrays for very long, you might not have seen them before. So let's say, for example, I've got a list of cars here and I wanted to make a unique list. So let's say I wanted to use it in a drop down, or I wanted to do a summary report of some sort. Now, ordinarily, you could just go into data and I could go into to go in, and where has it gone? It's that one there, remove duplicates. I've got my resolution up really high. So go to remove duplicates in there, and that would remove my duplicates. But I don't want to do that. I want to leave my original list there. I'm going to use one of the new formulas called a unique, and I'm going to highlight, and that is, oh no, it's not. I'm going to get a spill error. And the problem with that is that it's a dynamic array and it's trying to copy the same formula all the way down, and there's something in the way. So I'm going to just move that out of the way, and you'll see there that that has fixed it. So if you ever see a spill error, it probably means that you're doing or your Excel is trying to do a dynamic array, and there's something in the way, and it can't sort of work it out. So that will cause a spill error. So if you ever see one, that's the problem. And lastly, the circular reference, not really an error, but I wanted to talk about it because it's quite relevant for financial modelling, these circular references. You can't have a circular reference in a model. I know that some modelers will say, yes, you do. You should have, if you have a circular reference, you just need to enable iterative calculations. In my experience, it generally causes a lot of problems. And this is the situation that they're talking about, where you've got a P&L, a cash flow, and a balance sheet, and you've got your interest calculation that is driving your profit, and your profit is driving your funding, and your funding is driving your debt, and your debt is driving your interest, and your interest is driving your profit, and you end up with this big circular reference. And I find if you enable iterative calculations, that is going to allow that circular reference, and it will calculate. I do find that it causes a few problems. I usually, you end up with quite a few issues when you do that. So my recommendation would be to get around it mathematically if you can, if you just do a working P&L, or you can run a macro that will paste or break the loop basically in that way. So that's a way of getting around the circular reference. So the last strategy for reducing error is one that's very important, is error checks. So a good financial modeler is always looking for opportunities to include error checks in their model. So whenever you see that this, you know that this calculation here should be equal to this calculation here, you want to make sure that they're the same, and so you just do an error check to fix that. So checks though will generally help other people using the model, or later on. It's not going to help you when you're building the model. It will identify if somebody is using the model and they're using it incorrectly. So if they've put in perhaps an input that isn't that it's not expecting, or something like that. So error checks should not replace good modeling practice, is an important thing to remember. So those were all of the 10 strategies for reducing error. So I got those from chapter 13 of this book. So I'd like to go in now that I've covered that. I'd like to talk a little bit more about error checks. So I think I'll just show you perhaps a couple more examples of error checks, because it is an important part of financial modelling. So the options for building error checks are to just basically say one cell minus the other, or you could do cell equals equals, and that will give you a true false. If you do want to show the word error, some people like to say okay, or error, something like that, then if you use this does not equal, that's a little dangerous. That can sometimes cause a false error. So I'd recommend that using the absolute value of one cell minus the other is greater than 1. That will actually allow a tolerance for error. And you could use a summary page that will summarize all of the errors. Let's have a look at Excel. I just want to show you some examples of some different error checks there. So for example here, so this is an example of an error check that's using the absolute value, if you're able to see that one there. So that's if the absolute value of one cell minus the other is greater than 1, give me an error, otherwise a 0. So for example, if I were to go in and say manual space, because that space is often going to cause a problem, and that will give me an error, and I pop some conditional formatting over like that. So just a really, really simple error there. This is probably an even simpler one. My favorite way of doing an error check is something like this, where you've got your sales, salary, rent, overheads, and you want to spread that out over 12 months by using some phasing. And so by doing that, we just multiply it by the phasing amount there, and we want to make sure that that cell there is equal to that cell there. And to do that, I've just done one cell minus the other. So there's absolutely nothing wrong with doing an error check that looks like that. So that is probably the most common way that I build an error check, basically. So just jump back into here. So just be careful that Excel does truncate at 14 decimal places. So sometimes it might say that it's 0.000000 out, when in fact, so just be aware of that. So just now that we've talked about error checks, I just wanted to jump in now and talk about a couple of tips and tricks and do's and don'ts for financial modelling best practice. So that is my last point. So probably the one that I think is the most important when you're building a model is to have consistent formulas. So this is something that often some really advanced Excel people don't always do. It's actually Excel 101, and that's just using the dollar signs. So let me show you what I mean by that. So let's say here, where if I say that multiplied by that, instead of going like this, that multiplied by that, and then I would have to go equals that multiplied by that, and instead of having to do that each time, multiplied by that, it is a much better practice to use your dollar sign. So you can use your F4 shortcut to put the dollar sign in. So if you put the dollar sign in front of the column remains the same, and you put it in front of the row remains the same. And that way you can copy it all the way across and all the way down. And if you have thousands and thousands and thousands of rows, and you might be going out for, 65 years or something like that, it will work perfectly. And it's always trying to have consistent formulas and as few unique formulas. That's one single formula, and that is a much better practice way of building it. If you're going to get your model audited, one of the things I'll look for is how many unique formulas are in the model. The more formulas in the model, the more difficult it is to audit, and the more expensive it's going to be. So be careful of that. If you did want to do that same technique, you can do it with dynamic arrays. So dynamic array formulas will, one of the things I do like about these new dynamic arrays is that they are consistent. They are basically forcing you to be consistent, which is quite helpful. If you do want to use named ranges, you can see I've created a named range here. That's interest rate 1, that's interest rate 2, and that's interest rate 3, like that. That means you have to have one formula here, one formula here, and one formula here, which means that you don't have consistent formulas. So I don't recommend doing it like that because it's not consistent. If you do want to use named ranges, you could use one whole name like that, or you could do one whole name like that, and then you could use the whole lot like that, and that's okay. I still think it's a little bit confusing. I actually still prefer to do it like that. I think that is probably the easiest way to just be able to follow you're trying to do. So that is my first tip and trick for financial modelling best practice. My next point is to always link as much as possible. So always linking, not hard coding, because you want to be able to link back and trace and see where the numbers are coming from. If you are going to link to external files, I prefer not to link to external files if you can possibly help it. But if you do want to link to external files, then perhaps using named ranges is not a bad idea, because that's just a bit more consistent. It's more robust. So rather than using a cell reference, if the cell reference changes, then the named range will be more of a robust way of building the formula. So let me just show this. I've got an example here for you. For linking, let's say, for example, here, make that one a little bit bigger. Let's say you've got your NPV, you've got your project, here's your cash flow, that's your cost of capital. And so by linking it there, everything is just simply going to drive through. So if I change that to 9%, everything's going to change. And even, did you notice that the title of the chart automatically changed as well? So that was a dynamic title like we did earlier, and I've actually just linked that through to the title of the chart. So by linking it, you just have to change one single formula and it all just flows through, which brings me to my next point of only entering it once. So you have one single formula and everything flows through. So you should never hard code within a formula. So let me go to my next example here. So let's say here you've got a staff budget that looks like that. You've got your start dates here, that's your date there. And let's say a good way of building a model, particularly with the dates, is you have a start date here and you have everything rolling forward. So this one I've used, if you can see that, depending on how big your screen is, that is using an EO month formula. So it takes you to the last day of the month and then you just put a +1 in it like that. So if I were to go into here and change that to 22, if the date was to change, everything just rolls forward there. So I really only have to change it once and everything flows through. And just going back to this example, this is another reason why you should always link. If you're doing a cash flow, for example, a corkscrew cash flow, a good financial model, if you are linking, if you're creating like a set of financial statements, which is often the purpose of a financial model is to build a P&L or an income statement, a P&L, cash flow, and a balance sheet. To have all of those linking together is a beautiful thing. So a three-way financial model. In order to do that, this is what perhaps the cash flow forecast might look like. You have your opening balance that links down to your closing balance, which links up to your opening balance, which links down to your closing balance. We call that a corkscrew cash flow. And if you don't link, it doesn't work. So that's a really important that you link right throughout the model like that. And the last point, my last tip for financial modeling best practice is formatting and labeling. So using symbols, making your labels really clear and formatting, it just makes your model so much easier to read. It can avoid mistakes and misinterpretation, because one of the most common mistakes in financial models is mixing units, not necessarily apples and oranges, but perhaps currency, like you might mix up pounds versus dollars or something like that and not realize that they're different units. And so that's why it's really important to make it very clear what the units are by using formatting and also for labeling. And most of my models, you'll have one row that is dedicated for units or one column that is completely dedicated to units, just to make that really clear what those different units are. So let's say, for example, here, if somebody were to give you a report or a model that looks like that, it's quite difficult to read. There's just, the labels are really awful. You know, this formatting is like very higgledy-piggledy, makes it quite difficult to read. Percentage as a title is really not very helpful. The word amount is not very helpful either. You can see that it's an amount. It's like calling it a number. It should be right aligned. You should have some formatting. Having commas in a number makes it much easier to read. Having a brackets around the formatting would just make this much easier to read. So those were basically the points of best practices that I wanted to cover with you today. So we are going to take some questions very soon. So what we talked about was the why and how of assumptions documentation. We covered 10 strategies. Wow, we covered a lot, didn't we? We covered some 10 strategies for reducing error. We looked at building error checks into your financial models, and we did some tips and tricks and do's and don'ts for financial modeling. If you have some questions or some comments or something that you would like me to talk about, we still have a couple of minutes left. If there's one, I know I covered a huge amount there, so if there's something you'd like me to go over in more detail, we can come back to it. These are, if you like the presentation, I do some online training. So those are the online training courses that I have available. They are mostly on demand, which means that you can sign up and do them. They're pre-recorded videos. The other thing I wanted to mention that you might be interested in, if you are pursuing a career as a financial modeler, then you might think about becoming a certified financial modeler. And this is quite a well-regarded certification. It's run by the Financial Modelling Institute. I am an approved training provider for the Financial Modelling Institute. But what the Institute does is you have to sit an exam twice a year. And so you need to build a full set of financial statements in 4 hours. So that is quite a challenge. It is a grueling exam. There's a fairly low pass rate. A lot of people don't pass the first time around because it's quite a strict time frame. And you get given a set of financial statements, historical, and you need to do a projection for 5 years. It's a physical exam, so you have to actually be there physically and sit that. So that's run. The next one's coming up, I think it's the 24th of October. So that's something that you might consider doing. I have some. I also run some meetups as well. So I have some virtual meetups coming up. So there's one coming up on Wednesday night on Supercharge Your Excel, about how to improve the speed of your financial models. So there's quite a few things relating to financial models. I ran some meetup groups, or I do run some meetup groups in Sydney, Melbourne and Brisbane in Australia. And we're not able to meet physically at the moment. So we've been doing all of our meetups virtually. So you are very welcome to join me. That's the side if you'd like to join. So Deepak, do we have any questions or comments or anything people would like to cover in a little more detail? How are we going?
Yeah, Danielle, so far no questions.
Okay.
The comments the tips and tricks are very good. They are really helpful for the members. They have learned some unique formulas today.
Okay.
So the comments are positive. We are just waiting for some more. If you want to run through any more topic, let me know. Would you like to run through any of the topic in detail?
Well, I can sort of go in. I can talk. I can talk about this stuff for hours.
Okay.
So
Assets, there are no questions. Assets, there are no questions.
Yeah. Is there a particular area you think that would be more useful that we still have a couple of minutes left, so we can cover one of the areas in more detail, if you'd like.
Would you like to share a sample model, something like that?
Yeah, I don't have one readily available. Yeah, so I suppose what a lot of people think of as a financial model is a three-way financial model. We have the financial statements, but that's not necessarily the only type of financial model. A lot of models are not where you're not looking at the entire company. You might be just looking at you know, a particular area of a company or something like that. Yeah. So I can, yeah. So you have a question about the dynamic title. The yeah, sure. The just going back to this chart. Was that the one? Yeah. So what we did was we created a chart. So that's I might just, if I create that one again and show you how that was done. If we highlight the chart like that and we go to insert a chart like that, and it automatically creates a title like this, but I can change that title to something else. So I can go to here and just press equals, link, and then just hit enter. And so that's created a title like that. And so I've done that using the text. So if you wanted to do something like, you know, MPV, so I'd say equals MPV, and then ampersand, and link it to 9%. But of course, the way that it's formatted, you can't really see it very well. So I would then need to go in and format that as the text, and we'll go hash. So that's what it would look like. Put inverted commas in there and then close bracket. So you would be able to change that there, and then you can sometimes you can do a little text box that might link. You could do a similar thing there. You can also link that to there. I won't do that now. But then basically, if your cost of capital was to change to 10%, then you can see that everything changes throughout the model. Yeah. So so we have a question about the dynamic arrays. Okay. Actually, that was actually something I might just quickly cover this and then we'll talk about the dynamic arrays. This was actually an example that was what we often find, one of the errors that we often find in financial models is where you've got data and it actually stops at the bottom like that. And that can be quite dangerous and wrong. So what we often find is people go like this. So they highlight the entire column, which is actually making your model work much harder than it needs to. So what I recommend instead is if you use a table to insert, if you go to insert table, then the formulas look like that instead. So I'll show you how to do that. I'll go back to that example there and I'll say insert table. And that's actually going to convert it to a table. And so then when you go in and use the formulas, instead of using dynamic formulas like that, static formulas, you use the names like that. So the range would be the region, and then the sum range would be the sales. Look, something like that. And that's just a much better practice way of building the formula. Okay. So yeah, just going back into the dynamic arrays. So that's the dynamic. You can tell that it's a dynamic array because it's got this little blue line that goes around the outside. So probably one of my favorites is the one that I showed you there, which was the unique. I say unique equals unique, and then that. And so that will automatically create a unique list like that. So if I were to, create a new one like that, it'll automatically pop up, a little bit like a pivot table used to do, but much quicker and a more in a more dynamic way. Okay, how are we going? Oh, okay, we do have more questions. When we create dynamic arrays, sometimes we encounter circular errors. I don't think that dynamic arrays are necessarily more prone to circular references than anything else. If you do have a circular reference, I'll just show you how to fix a circular reference. So let's say here's an example, perhaps, of what. Let me make that a little bit bigger. So if you've got a formula that looks like that, and let's say if that was F6, a really simple example of a circular reference. So a circular reference basically means a formula that's linking to itself. And the easiest way to find, so basically, like I said earlier, if you have a circular reference in a model, you need to find it and you need to kill it. And you can tell that there's a circular reference there. It says F6. And that makes it quite easy to find. But sometimes circular references are much, much harder. So let's say you're over here and I can't see. It doesn't tell me where my circular references are. So the easiest way to find a circular reference is to go into your formulas, go to error checking, circular references, and you can just jump. It will actually find, you can hunt it down and find out what the problem is. And you click on that, it will jump straight to the circular reference. How do we clear the errors? I think that's, I'm not sure what you mean by clear the errors. That's how you would clear a circular reference. So you basically need to find what the problem is and basically fix that. So that's that one. If you have errors, so you could trace the errors or run error checking, we'll find any Excel errors on the entire sheet. So that can help. Can you please elaborate on how to create a good summary sheet in modelling and its best practices? Okay, how to create a good summary sheet. That's quite a broad question, and I mean a financial model could be for any purpose. So what you put on the summary sheet is really could be anything. It really depends on. It could be a dashboard. It could be a summary of the changes. It really depends on what the purpose of the financial model is. If you go into the FMI financial modelling exam, then you are you have to actually build a cover sheet and a summary sheet. If you don't have a summary sheet and a cover sheet, you'll actually lose marks. So on the cover sheet, you have to have the name, the purpose, and the date. On a summary sheet, you have to have the P&L cash flow balance sheet summary, like just the balances, and you also need to have some ratios. So that's what is appropriate for a three-way financial model, but it really depends on what the situation is. How difficult is it to create a model for funding scenarios? It could be really simple, or it could be more. It really just depends on the type of situation, really. How is a funding model different from other models? Okay, not really. I mean, models are so different to each other. A funding model would usually be when you want to work out how much cash is required. So you must always start with the end in mind. So you say, well, the purpose of the model is for funding, or to find out the funding, and so you work out what is the income, what is the incomings, what are the outgoings, and then work out the cash flow shortfall. And so that's how the model would be structured. Can can the users get a template for getting to know all the features of financial modeling? Okay, wow. People often say that. They say, can I have a template for a financial model? And so, well, gosh, there's just so many different types of templates out there. There's just so many. I can recommend some good resources. Here we go. There's one there, and there's another one there. So I have a website which I have lots of. I have a YouTube channel and lots of resources, and also the virtual meetups that we're running. They're all free and similar, so you can learn a lot from there. And we always give away the models as well. Overview of a total.
Danielle, can you show the book for the members? A book.
Yeah, sure. I can, even better, I can share the, why don't I go back to here? Go back to there. How about that? That's what the books look like. Overview or share your experience on the career advice as a financial modeler. I think it's a fantastic career. It is very much a skill that's in demand. I think there's very few people who would call themselves a financial modeler. Like I am privileged to call myself a financial modeler because financial modeling is all I do. For most people, though, financial modeling is just part of what you do. So you might have a role in an organization and the majority of your work will be in finance or doing reporting or analysis or something like that. And part of that will be financial modeling, but not all of it. And it's just such a great skill to have on your CV. And I find that I think that, there's some, I'm a trainer, I teach people how to build financial models, but I think that what employers are looking for is experience. Reading a book on financial modeling is great, coming on a training course is great, but actually having some hands-on experience at building a financial model at your organization. So my recommendation would be to try to get as much experience as you hands-on. Like modeling is a practical thing. Like, yes, you can read about it, but you need to actually build it and you need to do it. And having that sort of experience is going to be great when you the next time you need to go for a job interview. What is spill error? What is the workaround to edit the formula down? The workaround with the spill error is you need to find out what's in the way and get rid of it. That's really how to get around the spill error. Okay, so any other questions? Financial modeling job versus financial modeling consultant. Well, either really. I think if you are a consultant, I'm a consultant, so I have sort of two sides to my role. I teach people financial modeling, but then I also work as a consultant. So a lot of the work, well, all of the work that I do is I go into organizations and help them with their financial models. And it's such a specialist skill that people know a little bit about it, but having being a professional modeler, you're going to be so much faster than somebody who only does it part of the time. So if you're a professional financial modeler and you do this all day, every day, you're going to be so much quicker than anybody else. And so as a consultant, then that's, because you think in a certain way. And I think it's such a great career, and it's a skill that's just so widely applicable to so many different industries and companies. It's just it's just such a great skill to have, particularly in the current climate, where things a lot of the financial models that we're building are to predict the future, and we don't know what the future holds. And so having really good financial modeling skills is just so good to have. How to build a growth model. Yeah, well, hopefully it's growth. I presume you mean more like a forecasting model where you're looking into the future and seeing how things grow. Most models are time series, so they're normally looking into the future, and you've got your years or your months across the top. And there's lots of different ways of doing that. So you need to consider your escalation. How are you going to increase, or what growth factor you're going to use on that in the model. So you could either base it on historical data. At the moment, that's probably not a great thing to do because we really don't know what the future is going to hold. What I recommend really is for drivers to use the drivers of them. Your drivers might be things like head count or other factors, and then use those and then index your the outputs of your models to the drivers, and then you can run scenarios and sensitivities on the financial model. How would you growth model for a local government? I don't know that government really would be anything specifically different to other types of models. I mean, every industry has got its own things that are different to other industries, and one of the skills of a financial modeler is knowing your industry. I know a little bit about lots of different industries, so I think it's important to know, like if you're working for local government, to know how things are calculated, what the drivers are, for example. Those things are important for a government. How do we stop the spill error from spilling automatically? I wish I knew. No, you cannot. The dynamic array, when I first got dynamic arrays, the first thing I Googled, how do you turn dynamic arrays off? Because they're really annoying. You can't. If you have dynamic arrays, they are here to stay. Correct me if I'm wrong. There may be somebody who knows how to do it, but I couldn't figure it out. So I had to learn to live with them. And so to stop the spill error, I don't think you can. I think you just have to figure out what it's doing and stop it. Do we have any other questions, Deepak? How are we going for time? So we're
nothing.
Over for an hour.
That's all, Danielle. I mean, I think you answered all the questions patiently. Thank you for your time. Just a moment.
Yes.
Over to Neha.
Thank you, ma'am. On behalf of Excel in Excel, we are so happy to have an opportunity to learn a lot from your session. It was brief and precise. I'm sure the participants will feel enriched in your knowledge sharing. It was an outstanding presentation and highly informative. I also thank the audience for their support and participation and taking your time out. Few announcement to our participants. We are also glad to announce that we are coming up with one more session on 5th of June on the topic of 5 must-have charts in any finance person's toolbox by Mr. Chandu, founder of Chandu.organization and a Microsoft Excel MVP on 5th June 2020. Details about the session is available in our website www.excelinexcel.in/EiEFreshTalk.
Daniel, thank you, Daniel, for accepting our invite and being with us and sharing your experience and thoughts. Thank you, Daniel. Look forward to collaborate with you in future.
Thank you.
Bye-bye. We'll share the, will you be sharing the, any documents, slides or?
Yes, I will email those to you and you can make those available for everybody.
Sure, I will host it in the site and users can download it. Sure.
Okay.
Thank you, Daniel.
Thank you.
Thank you.
Thank you for having me. Okay, bye-bye.
Sure, bye-bye.